All right, so we're going to have an understanding of the session manipulation theorem. And now, by now, you should have heard about the power of three, which is the distribution, the manipulation, and the consolidation. Now, we want to focus ourselves on the manipulation because we want to trade the distribution. Now, I want to tell you that every single day, in every single session, there is also a distribution, a manipulation, and a consolidation in every session. Now, today I am going to focus on the manipulation, and from the manipulation, we are going to be able to pick the distribution, and that's what we're going to be trading because it's the longest and it gives more good moves in the market. Now, the rule or the theory says or states that the manipulation of every session happens 1 hour before the session open. I'm going to say that again. The manipulation of every session happens 1 hour before the session starts. For example, let's say this is where the New York session is going to happen. That means that, let me use this. If this is where the session is going to start from, an hour before the session opens, there is going to be a manipulation between this and this hour. Between the first hour, the 1 hour before and to 1 hour when the session opens. Let's say, for example, an instance is session opens at 3 o'clock. Because London session opens at 3, the manipulation of the London session always happens starting from 2 to 3. So that means if this is London session, that means this is going to become New York time. Okay. I want to use New York time because that's what is going to be easier for us from all the time we've been saying New York time. Now, the same thing happens if this is the New York session, which is 8 o'clock. Okay, if this is the new session, which is 8 o'clock, we are going to have a manipulation starting at 7 o'clock. Okay, this is what is going to happen. So now that means that this is going to be 7 o'clock. I do not want to focus on the Asian session because it's not what I trade. Okay, I don't trade the Asian session, so I want to focus on the London and the New York session. So that means that this is going to be 7 o'clock New York time. Okay, this is when we are going to have the manipulation starting. So if you master this, this is going to be a game changer for you, and you're going to understand how the is going to move. So now let's look at this. This is what the theory says. We're saying that the session manipulation always happens in the last hour before the session opens. That means the last hour, 1 hour before the session is going to start, we are going to have also starting just 1 hour before the session starts. And then after it has started, we want to now start looking for distribution in the session. That's why when you hear people saying, I trade New York session, I trade session, if you've not understood this theory, it's going to be difficult for you because knowing how to trade the London session, knowing how to trade the New York session is different from you wanting to trade the New York session. Okay, you may want to trade the New York session, you may want to trade the London session, but you don't know how to approach it. So you'll just see a lot of volume in the market. You don't know where the market is going. You'll be buying when the market is actually, the volume is going to sell, or you'll be selling when the market is going to buy. So we're going to use these sessions here, this manipulation theory, to be able to filter out the best trades for us to be able to take. Most times this happens every single time in the market, and I'm going to show you on the charts how this happens, and then we're going to be able to pick some example trades from the market to take the real time. Okay, so New York session, we're saying London sessions at 3 o'clock. So what you do is you mark out 3 o'clock New York time, and then after that we are also going to mark out 2 o'clock New York time. This is where we derive the strategy called the L213 system. So you can see this is 2 o'clock, this is 3 o'clock. Just random, by the way, I did this randomly, I didn't have anything. This is 2 o'clock, this is 3 o'clock. What do you see? From 2 to 3, what do we do? we were selling, okay? So because we're selling between 2 and 3, that means after 3, we're now going to look for buying opportunities because we were selling. This is a manipulation. Now we're looking for distribution. So what you have to do is now to come to the left, and then you, of course, you're going to have other things that you're going to use as confluences to be able to take this trade. You don't just start selling from, buying from here because you've seen this selling. When the market closes at 3, you just start buying immediately. No, there are confluences which we have learned. Okay, there's other confluences that you're going to use. For example, there's liquidity here. Maybe you could say that is liquidity. So we also have something like, if you go high time frame, you'll find this as an order block. There's a fair value gap over here. All this we have learned about them. So you have to incorporate all these things to be able to take a trade. But this is going to give us a directional bias. That's what we have to do. We use this to get a directional bias in a day. So let's look at what happened. And then we also have another session starting at 8, but saying the manipulation is happening from 7. So from 7, what do you see? Between 7 and 8, what do you see? Between 7 and 8, we have a manipulation. So the market has been selling between 7 and 8. That we're now going to look for buying opportunities. I think you can see what I'm talking about. So these are the trades that happened. Okay. So we had a buy on GBP/USD. We had buy on GBP/USD London session. And if you took this trade, with the candlestick patterns over here, we're going to learn about this also. I'd not taught you that. So then again, we see another trade coming up. If you're a London trader, you would have traded here and made money. If you're a New York trader, you would have traded here and made money still. This is a distribution after the manipulation. So we can see from here, we manipulated, and then we get a trade from down here using other confluences from the market we have learned. Then you can be able to take out this buy from that point. Okay. So thereafter, we have seen our sell. Now we're going to have other concepts we're going to be incorporating into that system. So what are we saying? This is what we are saying, that if you see the market between 2 and 3, if you see the market is selling, okay, that means we want to look for buying opportunities after that. And if we see the market buying, then we want to look for selling opportunities at that point. The same thing happens with 7 and 8. Also, when you see the market is buying at 7 and 8, between 7 and 8, we want to look for selling opportunities. And if you see the market selling between 7 and 2, we want to look for buying opportunities thereafter. Very simple like that. We want to distribute by buying. So that's what we have right now. Okay, so that's what we're going to. So we have seen on the charts. Let's go back to the charts, and then we'll be able to pick out some random trades, and then we'll be able to. So we got a Thursday trade. So let's take another day here. This is still GBP/USD. I can go to another instrument, but let's take another day over here. Okay, so you can see. Let's see what time this is. Let's see, 7 o'clock. We have 7 over there. And then we also want to take 8 o'clock time. This is 7 and 8. You can see these are random trades. These are random days I am picking, but you can see what I am talking about. So between 7 and 8, you can see the market was selling. Okay, between 7 and 8, this is bearish. So that means we are looking for opportunities over here. So you can see that we had a good buy trade over there. This is 5-minute time frame. Right, so we have a good buy over there. Okay, so what is 3 here? What is happening at 3? So we over here, and we have 2 over here. Okay, 2 o'clock. Okay, so we have 2 o'clock. We have this is a sell clearly, because when you look at this, when the first candle is here, and then the next candle is here, so we had a buy, a sell. So that means we're now looking for buy opportunities. Let's take another random trade, and then that will be enough for the examples. Okay, let's take another random day here. Okay, we have 8 o'clock is over there. We have 7 o'clock is over there. And you see we have a sell, and after the sell, we now have a buy as a distribution. This happens every day. This is happening every day. Okay. And then what is happening at 2 and 3? Let's see what happened at 3 and on this day. Okay. 2 and 3. So this is 2. Okay. So at 2 and 3, between 2 and 3, we had the market buying. Buying where we have liquidity over here. Okay. We have liquidity, somewhere here. So if we have liquidity here, the market is buying. So we want to wait for the market to come and take out this liquidity. And if that happens, then we have the market giving us our trade very, very nicely here. So we just wait for the market to come here and then give us a sell from there. You can see we really were able to pick out this trade and made some money. That's what happens every time. I don't know if I should go and get another example. Another random example here. Okay, so we have 7. Let's see what 7 does. This is 8 o'clock. That's 8 o'clock. That way is 7. 7 is over here. 7 o'clock. What is this? This is a sell. So we're having a bearish move, and then that means we're going to expect a buy thereafter. So we can see from here we sold and then we bought there immediately. And that is really good trade over there. So if you're targeting this high and you took your trade down here, you were targeting this high, you would have taken about 1:3 risk reward ratio. That is another very good trade. Okay. So you can see again that here at 3 also, this is 2. Okay. So from 2 and 3, so they're really buying. This is a good buy. It means we are looking for selling opportunities. This happens every single day. This is happening every single day. This was Tuesday. This is Wednesday, and this is Thursday. Even Friday, if we same thing on Friday, we are going to find that same pattern. It is repetitive. I don't want to make this video very long. I hope you have picked the concept. And if you do not understand anything, you can also let me know in the comment section.